The entry of digital banks and the idea that there'll be more choice is pushing established players to improve what they have on offer. But the retail banks say digibanks won't be giving them a run for their money.
The cost of maintaining bank branches and ATMs like these is something digibanks can do away with, as they operate entirely online. With no need for a retail presence and lower overhead costs, experts say the new players can afford to offer better interest rates and cheaper pricing for their services.
In the short term, a lot of pricing pressure for the incumbents, because the digital players will want to attract people with lower rates and fees. The other area where some pricing pressure may happen is the fee-based products that the incumbents currently have. So, for example, to do remittances, to do FX transfers, there are certain fees associated with that.
Still, digibanks are challenging the incumbents, as they're set to target those who can't qualify for existing banking offerings. These include gig and foreign workers, as well as smaller firms like mom-and-pop shops or startups seeking financing, who may have little banking records and assets to pledge as collateral. Experts say the digibanks are likely to rely on technology like data analytics to monitor consumer behavior and prevent bad behavior.
Then there's a lot of who actually do approach the banks, and perhaps they don't get the loan that they feel that they deserve. If you are a fully traditional bank, then without securitized assets and purely looking at your cash flow is a risk that many banks are unwilling to take.
While the incumbents welcome the competition, they say an interest rates war is unlikely, with at least one lender saying its rates are already competitive, and cutting it down may not be sustainable in the long run. Even so, the incumbents aren't resting on their laurels, as they continue to invest in their digital capabilities and build brand loyalty. For instance, banks offer apps which uses AI to study customer spending patterns to help them better manage their finances.
We can help them with their financial wellness, with their financial planning. And I think that is far, far, far more important and much, much more valuable than interest rates.
Another edge is face-to-face interactions like this.
And in a recent survey that we did, 2 in 3 customers say that they value an advisor-based face-to-face interaction, especially when it comes to financial planning, as well as long-term financial commitments such as loans or mortgage loans.
And it's this ability to serve customers offline when it comes to bigger value transactions that these banks are also banking on to keep them ahead.